Dennis is saying, let's check out the correlation between CGC. Dennis, I like it. I like it a lot, Dennis. Good call, buddy. I like it. I like the CGC, the straddle portion, but I do like the CRON relative to CGC. CRON's got earnings. When are CRON's earnings? Good point, dude. CRON is much cheaper for smaller accounts, guys. Dennis, you've been coming up with some really good ideas. Dennis, how's the account doing, buddy? Making a bunch of money? Get the count over 100 yet, then? 85? We'll get there. Interesting trade on CRON. As we could see here, it's very inexpensive to CGC. Dennis makes a great point. For smaller accounts, it's a very efficient trade. This is unfreaking believable. Look at the skew in these things, guys. Look how expensive the upside is, right? You go $5 higher and $5 lower, $5 higher, there's a market. $5 lower, there's nothing. I would do it. I like them both, guys. I really like that CGC trade. And then I like this, so you need to think of it this way. When we talk about a name like Kronos Group, we have catalyst up the wazoo, and there's massive short interest, and the companies, some people are calling it fraud. It's all uncertainty. It's all uncertainty. So I like these guys. I like CGC buying the calls and legging into the puts. I also like the long side of CRON. Dennis is saying buy the 10 calls and sell the 12 calls. Good question. I think, and a lot of people have been sending me their positions lately, and Susan and I were talking about this. I think that we're doing debit spreads too tight. Buy the 10, sell the 12s, cost 70 cents. You can make $1.30, right? I kind of want to get paid off more. If we're right, we got to get paid when we're right. We have to get paid when we're right. Because Dennis, if you look at this and say, you know what? 2 weeks later, it revalues itself and you're dead right, and you sit there risking $700 to make $1,300, you're going to throw up in your mouth. If it's trading 16, you are right. I really want to do vertical spreads on the call side of the put side to manage money, to leg into those trades. The only vertical spread I would do right off the bat would be selling these quarters. Like Dennis, look at this. Sell the quarters, buy these for 50 cents. That's going to give you a $6 call spread for 50 cents. You can make $5.50. That's fun. Plenty of time. Or buy those 10s and wait. If the stock goes down, you can buy more because we're laddering into our positions. And if the stock goes higher, there's going to be awesome upside skew that's going to give you great premium on the upside. Even these, right? 40 cents against 25. These are really, really, really good. So Dave, I like buying the straddle or strangle in canopy growth, and then maybe buy these 14s or 13s and wait. If you wanted just to do a vertical spread, I would look at the top here, like 40 cents against 25 cents. I mean, you'd be 30-cent bid here. Would anybody, risk $50 to make $19.50 on the 23-25 call spread? Why not? You know what I mean? Hell, it's a no-brainer. So whenever I see skew like this, we want to leg into awesome trades. Yeah, these are solid. Even these up here, look at that. You can buy these for 15 cents. Say you buy these for 45 cents on the 20s. 45, 20, 30 spread. Sell the 15s, buy these for 45. You just did a $300 trade, right? $300 of risk. And if you're right, you make $9,700. Of course, it's a huge move, but it's so freaking cheap. And so you could still do the trade here. You could still be active in Canopy, where they're a stronger, more substantial company, but who knows? And what's the market cap of Kronos? 1.7 billion? Is that what it is? And it's got earnings. And by the way, there's a market up here. Yeah, 1.7 billion, 177. Guys, you can just do times 10. You got to understand that somebody's 15 bid up here because there's a likelihood the market's pricing in some kind of likelihood of the stock trading up there, right? These aren't idiots. They know what they're doing, but the skew gets real flat up here. They're too close to the same prices. There's no shape to the skew. And what this is and why there's no shape is because this is called jump risk. This is buyout risk. So those are my two favorite trades right now. The trick to trading, guys, is find the freaking catalyst. Go find the catalyst. Go find what could possibly move. And then we want to back into different trade ideas.